Conversations around the G20 this weekend and the B20, the Business 20, held this week. One of the consistent issues is around debt for African countries. Already this week, we've seen senior officials, the Finance Minister, Inogwangwana, has said African countries are paying too much interest on their debt, essentially because investors and ratings agencies are biased against Africa. G20 is the chair of the G20 Africa. Trevor Manuel is the chair of the G20 Africa Expert Panel. He's a former finance minister. He's also currently chair of Old Mutual. Mr. Manuel, good afternoon to you, and I really appreciate the time. We know debt is a huge issue for African countries. It's a big issue for us as South Africa. Do you believe there is a prospect of some change here?
Good afternoon to you and the listeners, Steve. Look, we have to believe that we can change it because we understand what the mechanics of debt are. You know, the acceleration in debt in 2008, debt across the African continent was was $215 billion, and that has now climbed to $742 billion. That's 3.5 times increased in just 17 years. And so we see across the continent the number of countries that are seriously affected, that have to spend more on debt service costs than what they do on education and health. And this is a big, big problem because countries meet the needs of the bankers, but don't meet the development needs of their people. So it's a big, big issue. South Africa is somewhat different. The bulk of our debt is actually domestic debt. It's owed to South Africans. Only about 10% of our debt would be foreign-owned debt. But for most countries, they don't have savings, so they have to borrow from abroad. And when you borrow from abroad, there are big, big issues. Firstly, if the exchange rate changes, then almost inevitably it impacts on the African country. And when interest rates change in the world, it also impacts. Now, amongst the issues that impact are those issues you've mentioned, including credit ratings. Now, we don't often understand it, but if you want to borrow from a bank, they determine the interest rate depending on where and how you rate it in credit terms. Now, South Africa, maybe 8 years ago, lost its investment grade rating. Now we are called subgrade. Sub-investment grade, which means that our interest rate costs are higher. And if our interest rate costs are higher, it means that for every dollar that we borrow, we have to take more out of the taxes we raise in order to service that debt. It means less to spend on the needs of people now. As President Mandela once put it to me, he said, if we're spending more on debt service than what we are on education, then we're spending more on yesterday than we are on today or tomorrow. And that is a big, big challenge. And that is the African challenge. So there are a number of things we can do. And this is what the African Expert Panel is focusing on. One of the things is to require of the rating agencies to be transparent about how they rate countries, what mathematics do they put into it. We also have made a call for a borrowers club, asking our finance minister, Inogwangwana, to convene other finance ministers and start discussing, because what happens is that the lenders, the bankers have ways of talking to each other, but the borrowers don't. And so every time African countries end up biting the short end and tend to pay more for the debt that they need. And so, in addition, we need rules that prevent both reckless borrowing and reckless lending, because it's not all the bankers. Sometimes our countries also misbehave, especially before elections, when we say, well, let's borrow as much as we can because the problem of the next government that'll come in. So all of these are issues that are factored into a report that we've released this week. We handed it to President Ramaphosa on Tuesday. We'll hand it to a number of African heads of state this evening. And tomorrow we'll hand it to the G20 leaders who are here.
The G20 agenda has got so many things on it. Do you think people are going to take this seriously? And I mean, I say that because European countries are sort of very worried about Russia. Russia's worried about European countries. The United States is a big issue. Is this going to get on the agenda in a serious way? It really needs to, because it affects so many people on our continent.
The report that we've drafted, Stephen, is a standalone report. It's not being negotiated, even though we did a presentation to the negotiators so that they can understand what the content of the report is, but it's not up for negotiation. We've had an expert panel comprising some 26 experts, the bulk of them Africans, from the 4 language groups, English, French, Portuguese, and Arabic. And now, if the heads of state this evening agree it, we will then mobilize to get the report before all of the African heads of state in February. We need Africa to take responsibility for this, and then a lot of work so that every African country will own a piece of the action, and we can determine our own way forward. That's how we're looking at it. So the G20 is important, but it gives us that platform to raise the issues very strongly. But this is actually a report for Africa to be owned by Africans, and we think that the work on this will take over the next 2 years or so. If we get this right, we will also give a lot of support to issues that we talk about often, the African Continental Free Trade Agreement. We need to be clear about what gets traded between African countries. And so it's not just about debt, it's about economic growth, it's about development, it's about what happens in the lives of Africa's people.
I'm trying to imagine the difference it would make to our continent if there was a change here. It would mean so much money for health systems, for education systems, for infrastructure. I mean, you would literally find it, so much cheaper to build a bridge or a dam or an electricity grid. I mean, the change would be immense.
The change would be immense. I mean, there's just too much money flowing off the continent. By way of debt service costs, there's more flowing out than flows in. And so part of what we need to do is to bring together some of the smartest brains and ensure that we work together on this. I want to give you an example. One of our panelists, a Jamaican-born economist who's a professor in the US, has done some work on the IFC, which is a private sector arm of the World Bank. And he has found that for infrastructure on the African continent, they make 5.8 times what they would on, there's a measure on the New York Stock Exchange called the S&P 500. So if they took their money and put it in the S&P 500, they wouldn't make nearly as much, not even 20% of what they would by just investing on the African continent. So the cost of capital is much too high. And because we spend so much to borrow money or to have money invested in the continent, we can't extend the money we are able to raise far enough, and we leave our people in poverty. This is a discussion we must have. It's not the stuff for tomorrow or Sunday. It's not when the blue lights leave Nazareth. This is a body of work we must undertake, and we must talk to people in ways that people understand and know that these matters are about what will impact on their daily lives.
Mr. Manuel, I won't push you on this, and I don't know if you have a view one way or another about how our government's been handling the United States, the boycott by the Trump administration. It seems to me an almost impossible situation to deal with. I do worry that, and maybe this is just a sort of journalistic concern, that the coverage of this weekend is going to be all about the United States when they're not even there. Do you have a view at this stage on it, one way or another?
Yeah, I do think it's very unfortunate, Stephen. The problem has been that every attempt has been made by the South African government, of which I'm not a part, to try and persuade the government of the United States to participate. Initially, it wasn't clear that they would, By about April, they had lower level officials participating. By June, there were more senior people participating. By the beginning of October, President Trump said that he wouldn't come, but Vice President J.D. Vance would. And by that time as well, the Treasury Secretary, Scott Bessent, was actively participating in meetings of the G20 in Washington, D.C. In fact, when Deputy Minister David Masondo gave him the report of the work already completed, he thanked Dr. Masondo and said he's looking forward to participating, and that would be over this weekend in the work. And then suddenly somebody pulls the plug. So you're not even talking about a country, you're talking about an individual that has the power to pull the plug on participation. Now, the unfortunate thing is that everything in the G20 is based on reaching agreement between countries on the issues that matter. There's no secretariat. There are 3 countries that are at the center of this. It's called the Troika. There's a former president, which in this case is Brazil. There's South Africa as the current president, and it should be the US as the incoming president. Those 3 countries will always persuade each other and then the rest of the G20. Unfortunately, the one participant in this has been missing, and this creates a problem for the G20. It creates a problem for global governance, because the G20 was born of the need to solve problems, and in fact, the biggest problems that come from the US. When the G20 was expanded to heads of state in 2009, it was because the US went bankrupt in 2008 because their rules actually created major problems. And out of that crisis, the bankers were protected, but ordinary citizens of the US, and I dare say the rest of the world, were actually thrown to the wolves. And now, having created a problem like that, you have a G20 made up of heads of state and a number of other ministries. They now turn their backs on it. It's very difficult. It's very difficult. It's unbelievably difficult to make policy statements for the longer term when you're dealing with people who try and take decisions when they wake up in the morning for that day and not for the future of the world.
Mr. Manuel, thank you very much indeed. I really do appreciate the time, sir. Trevor Manuel, Chair of the African Expert Panel for the G20, and of course a former finance minister as well. As the need for employment grows in Zimbabwe, so does the number of artisanal gold miners who are turning the district of Gwanda into a small-scale mining hub. But the work exposes many people to dangerous levels of dust that puts them at risk of tuberculosis and silicosis. That's increased the demand for accessible healthcare. Doctors Without Borders has now introduced an ultra-portable X-ray machine to diagnose lung disease right in the heart of Gwanda's mining community.